Yo, what's up, guys? Thank you for coming back. I'm basically today just gonna go over what exactly I took today in the markets. I didn't exactly play off of the obviously the stock open, but I just caught a trade literally a few minutes ago, and I want to go over that. But let's get right into it. Um, Obviously, you see here this whole exact move here. That whole push down happened during the open. I saw some people buy in this area. I honestly don't know exactly why they bought in that area. It doesn't follow my concepts. It didn't really react off of an imbalance that I wanted it to react off. I believe down here, yeah, down here at this imbalance, I wanted price to react off of that, but I don't know what happened. It just reacted off of this. If anybody did buy, I believe spread would have taken you out just because it did close below that stop loss. Unless you set stop loss down here in this area. But let's go over my trade that I just took just now. And I wanted to do this call before I give you that re-entry so you guys can see. But it looks like it already gave it to us. So obviously, as you can see, market is coming down, bearish momentum. And in order for the market to be completely let me say this right. Market needs to move a certain way for it to be healthy. So it has to create highs and lows, highs and lows, highs and lows. When you see market creating these big push-ups like this, that one, when you see it creating this one, or this big push downs here, 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 this is when you know the banks are coming in and basically doing their own thing. They're the ones moving the market at that point. But let's go over this. So as you guys can see, it's coming down bearish momentum, creating lows and highs, lows, highs, lows, highs, low, high. Came down, created this low. And like I said before, market has to respect this area here. In order for the market to continue down in a bearish momentum, it has to always respect this previous high. As you guys can see, it respected that previous high, respected this previous high, and respected this previous high. Never did you see the market come up in this area. Obviously, after this break of structure, which I'll go into right now, you saw the market did come up in that area, but it never really broke into those. It never went above and broke and closed above those last previous highs. So like I said, market is coming down, bearish momentum, creating highs and lows. As you guys can see, market broke structure. So a lot of people would have literally waited for that move to happen. So I know when we talk about institutional candles, it's not really an institutional candle. I've heard some people say that it's an institutional move, and they are totally correct. So I go based off institutional moves by the last 3 push down candles. If I don't identify the big push down candle like that, like you see here, I identify it as the 3 last push down candles. So what did I wait for? I waited for the market after it broke structure. I waited for the market to come in there. If you really pay close attention, I'm in the 1-minute chart, but you can see right here that you do have a IPA imbalance, as we like to call them. And literally, I waited for the market to come into this area, as it did. Stop loss at this low. This is no longer the low that we wanted the market to be at. And just because it's healthy, market will not push down to that area. So, like I said, it reacted off of that institutional candle. And my target was this imbalance here. As you guys can see, market literally came into that imbalance and literally took off. But from the looks of it, if it happens once, it's going to happen again. So market came down, high, low, high, low. What just happened? Market broke structure. Boom. After that break of structure, what do you identify again? Literally right there. I can just delete these so you guys can see them perfectly. What do you see there? You see an imbalance. Did it really react off of that imbalance? No, but this is where my Fibonacci comes in. For the people that know that we use Fibonacci, came into my 786. I pulled the trigger at 786. So if you missed that first entry, now you got your second entry. Obviously, stop loss is a little bigger, 25 pip stop loss. And obviously, you can either target that same exact area, or you can target this imbalance here. And exactly, I believe in the first move that we took, we caught a total of 102 pips. Yeah, about 100 pips. So we caught about 100 pips. Obviously, this second move here would be around the same thing, maybe less. This right here, so 86 pips, or if you're running it to the top, 126. Obviously, if you're holding this one, it just created a new low. I would move stop loss to break even and then close partials. That way, take your profit. So once it tapped on there, I closed like 80% and I let the rest just play on its own. As you guys can see, it's literally creating the exact same move every single time. You got highs, low, high, came down. Literally this right here would be a low, a high, came back, didn't really close over that, but if it closes above that, break structure up in that area here, or if you're looking at it from here, if it breaks that area right there, let's say the market comes up, breaks, we're going to anticipate the market to come down here. This institutional push move somewhere around that area, and then we're going to target higher. Obviously, we are bullish from here on. It did reach an area that I was waiting for the market to come to. I believe it was like 3,500, 35,500. So I see the market pushing up after that. Like I said, if it does break, wait for that market to come up here. Obviously, use your fib again somewhere around here. Matches your 786. Make sure you pull that trigger. It's an easy win. And obviously, that's exactly why I took this trade. Like I said, I do not know why somebody could have bought in this area here. If you pay close attention, right there is that low where somebody's stop loss would have been out. It literally took them out. And with spread, it would have took you out a lot earlier. But yeah, that was the first move. If you missed that one, that's your second move. And it should give you a third one. If it breaks, comes back down, take that third move. I want to go over one trade that I did take. I believe it was Monday or Friday, one of those days. And it's this trade right here. I believe it is that one. Yeah, it is that one. So let me replay this. Boom, right here. This is during the open. So as you guys can see, market reacted off of this imbalance. So that honestly, if that would have been somebody's first entry. Obviously, stop loss would have been down here at this low, but that's not something that I'm willing to take, because if you would have, let's say you would have pulled that trigger right there at that imbalance, you're looking at 28 pips, and that's fine. I believe the second entry is like 28 pips. That's reasonable. I would take that, but it's like I said, it's not enough evidence for me to take this trade. So what did I see? Low, high, low, high, low, high, low, high up here, broke structure. Obviously, let me go back. It didn't break structure. Obviously, it broke here, but if you pay real close attention up here, it did break structure. In this area right here, at the open, it broke structure, came out, took out some liquidity. If you're really paying attention to it, for those that go over the bounce back course, you know that we do have liquidity in that area. So took out liquidity. What did I wait for? Obviously, you do have an imbalance in this area here. And this would potentially be your stop loss now because it's no longer needed and it's healthy. So if you're somebody who was going to go long here, then you could have gone long there, 37 pips. But I believe from here to there, I used to fib. Match with my 786 down here at this last institutional push candle. This institutional candle here. Obviously, I identify my points of interest with the purple square and my imbalances with the blue square. And you could have targeted up here, I believe. I went higher than that. Let me go higher time frames and show you guys. Oh yeah, I think I targeted like this high down here or somewhere in between this area. But for the sake of the video, I don't want to get too much into it. As you guys can see, playing it. Is it gonna let me play it? Literally wicked in there, imbalance. I didn't wait for that 786. I got FOMO. I'm not even gonna lie to you guys. Fear of missing out. So exactly right when it tapped that candle, that's when I pulled the trigger. I didn't wait for that 786. That push, that candle right there. This whole move right here was when I entered into the trade. And obviously, as you guys can see, I believe it ran like, that's as far as it ran, honestly. I believe so. Of course, yeah, it stopped right there. But yeah, that's the trade that I took. From that, we ran up almost 205 pips. And I do keep a track record of all my trades that I take. So I don't know why I spelled my name wrong on there, but like I said, I do keep a track record. I don't want to click on it because I got all my information on there right now. But yeah, that's the trade that I took. I believe, when was this? November 22nd, which was, it was Monday. Yeah, so that one, and then this is what I just took today. As you can see, market looks like it's coming down into that area. I didn't take this. I took this. I ran with it, closed it, and I made my money. I made what I lost here and more. So risk to reward is very, very good. Let me tap into that just a little bit. Let's say that we are taking a total of 5 trades. And each trade, you are risking, I'm gonna use big numbers because I don't want to confuse y'all. You are risking $10 each. So let's say trade 1, you lose it, and so you lose $10. Let's say it happens with trade 2, trade 3, and trade 4. Trade 3 and trade 4. So you just lost a total of $10 in each trade that you just took on, from 1 to 4. You lost trade 1, trade 2, trade 3, trade 4. So you lost a total of $40. But let's say you come in trade number 5 and you won that one. Let's say that we were risking $10 to make 100 every single trade. So we were risking 10 on each trade to make 100. So let's say going into this, I was risking $10 to make $100. So every single other trade from 4, 3, 2, 1, I hit stop loss. So I lost a total of $40. But let's say that 5th trade, I really analyze my market. I get my head right. I get my mindset right. I know that I need to look for specific things to happen in the market. So what do I wait for? I wait for my evidence. After I wait for my evidence, I pull the trigger. Let's say trade 5, I win. I won $100. So with the right risk to reward, you're always going to win. You can lose more than you win, but with the right risk to reward, you're able to actually come at with more profit. So now that you lost $40, so 100 minus 40 is 60. Yeah. So you just made a profit of $60. Obviously, you lost the 40, but with the $100 that you won, you literally made those $40 back and more. You made $60 profit. So you just profited $60 off of these exact 5 trades. So if literally, honestly, this works for everything, depending on what you run a risk, depending on your capital, depending on your account. So if you have a $100 account, you're gonna only be making at least $10 per trade, risking at least $1, $2. That's how it has to be in order for you to keep maintaining an account. If you can't maintain an account like that, then you're always going to be blowing it. With this exact risk to reward, with the right risk to reward, you're never going to blow an account. So I just wanted to tap into that one, and then from there we are done. Obviously, I went over this trade. I went over the trade that I took on Monday, which was yesterday, and I believe I'll drop a video tomorrow of the trade that I'll be taking tomorrow. I do record calls on Tuesdays, Wednesdays, Thursdays with my boy Evan, and I'll be dropping those on here too. As you guys can see, it looks like it did break structure here. It broke structure, came back into that institutional move that I just literally said, and it looks like it's taking off. So I mean, if you're holding all the way up here, hold once it gets that TP up there, then close like 80%, leave the rest running. And like I said, overall, US 30 is completely bullish. So it's always been bullish. So it's going to push up eventually, but always be ready for that right entry for you to keep going up. And yeah, I'll talk to you guys soon. Thanks for watching the video. Make sure you like, subscribe, and share this. I drop a lot of free sauce on here that I honestly don't mind dropping as long as people are willing to learn the skill set. But yeah, I'll talk to you guys soon.